What's going on, everybody, and welcome to the video. In this one, we're going to be talking about a value stock that I am seeing some huge upside potential in, and I'm probably going to add this into my portfolio. We're going to be talking about the ticker is BWB. I'm not 100% set on setting this into my portfolio as I haven't looked into it enough, but let's go ahead and just get straight into it. Before we do that, actually, I do ask you subscribe to the channel and turn on post notifications so you don't miss out on any of my future content. Let's go ahead and get straight into it. So the company is Bridgewater Bank Shares. They're a financial company, hugely undervalued in my personal opinion, just looking at a ton of key factors. And over the past, few weeks, past month and a half, they have made a pretty drastic drop in price from 20 to 17, which I do believe this offers us investors better times to buy the shares. Let's go ahead and kind of talk about who this company really is. So they provide banking products and services to commercial real estate investors, small business entrepreneurs, and high net worth individuals in the US. I could go on and on in this list, but they do a lot of loans, money market accounts, savings, demand deposits. You get the gist. Your normal bank doing a ton of loans. Let's go ahead, and I kind of want to talk about why I really like this company. So they right now have a market cap of about $489 million and a PE of 10.65. Over the past year, they're pretty flat. 0.28% is very, very flat. Over the past 5 years, they have provided investors some pretty good returns at 38%. Year to date, it's going to be 1.37%. In 6 months, up 10%. So this is doing far better than the market. As we know, markets are down. The S&P, the Dow, the NASDAQ, everything's been down over the past year. And this company is still seeming to be doing pretty well. So on FinViz, here's a few things I wanted to point out. Their earnings per share over the past few years and expectations and sales have all just been consistently growing at incredible rates. Earnings per share this year increased by 64.8%. Sales quarter over quarter, 26.6. Earnings per share, 19.4%. And they have huge expectations to continue growing. Operating margin and profit margins are very well as also. Forward PE is 9.44 and a target price of $21.17. Remember, the stock trades for $17.74. Target prices are always just, kind of thrown out there. You never can really assume that it's going to hit. Looking on Simply Wall Street, the company is undervalued by about 17.2%. So this does show more indications of value. Now, let me show you a few things I wanted to point out. Profit margins on Yahoo Finance is 42%, operating of 56.93%. Quarterly revenue growth and earnings per share growth, both very solid numbers, especially for a financials company. It is a smaller financials company, but you don't expect this type of growth unless it's more so like a tech stock, per se. This is very solid growth in this industry. Operating cash flow also very good at $90.73 million. Now, furthermore, here's kind of what happened on their third quarter 2022 results. Revenue of $34 million, up 18% from last quarter, a year ago. Net income of $13.5 million, up 17%. Profit margin of 40%, and an earnings per share of 49 cents, which was up from 41 cents in the past quarter. Let's go ahead and show you a little bit more. Here's kind of this company's website, just a refreshing approach to banking, looking at different things, division to see banking differently, local bankers with an entrepreneurial perspective, and we're seeing a ton of different things that this company can do. Here is their third quarter earnings presentation. Gross loan balances up $154.2 million, 19% annualized. Investment securities balances up $59.4 million, up 48.9%. And deposit balances up $103 million, which is 12.8%. These are very solid growth numbers. Net interest income year over year is growing by about 18.9%. That is an incredible growth rate. Furthermore, robust loan growth continues, 24.6% year over year growth on their loans, which is insanely incredible. Okay, furthermore, multifamily expertise driving consistent growth and performance, 42.2% year over year growth. These are huge numbers, and this is just showing a great company per se. I'm not saying they're a great company just because of growth, but looking at everything else, this does seem like a very solid and sound company. Deposit growth and stable mix continue to support loan portfolio as deposit growth is growing 15.8% year over year. Tangible value, book value per share growth is growing at 16.5% compound annual growth rates. Incredible stuff that I like to see, especially with just the way the markets have been performing. This is really good for this company. Furthermore, pre-provision net revenue growing quarter over quarter, being the highest it's been in this past quarter. Really good stuff that I like to see on this company. Their net interest margin is also increasing year or quarter over quarter. Just key indications that a company is doing well. They know what they're doing, and they're just getting better and better and better. And this is another reason why I like this company, is it seems to be very consistent in its growth. And I'm not saying just because of its past that it's going to continue being like that, but it does have expectations from just reading and seeing different articles. Bridgewater Bank shareholders have earned an 11% CAGR over the last 3 years. Just look at it. It's up 37% over the past 3 years, beating the market return of 21%. This is not including dividends, as BWB does not pay a dividend right now. But during the 3 years of share price growth, BWB achieved compound earnings growth per share of 20%. EPS growth is higher than the 11% annual average increase in the share price. So that does kind of show their earnings are growing by a lot, but their share price is not matching that growth. And a lot of investors, the top investors, Peter Lynch, Warren Buffett, you follow the earnings, you follow the stock, and we're seeing a gap right here, which does provide more concern for value. So now we see $1.75 is the current year kind of estimates for earnings per share. Next year being $1.88. Sales expect to go from 138 million to 153 million, giving about 10.8% growth in sales, which is a very, very good number. And to show you a little bit more, insider transactions, we've seen one purchase, which was in February, from an individual, bought 10,000 shares valued at $175,000. The price that they maximum bought at was $17.50. I mean, as we saw, the stock currently trades for $17.74. It's been very flat over the past year. So this does kind of provide that value that insiders were buying at this price. It seems that nobody's selling. This is a good indicator as well. Lastly, institutional inflows 66.84 million compared to outflows of 12.96 million. These are very good numbers. I like to see this stuff, especially in the past quarter. We've seen a lot of buying pressure compared to selling pressure. So overall, I do think this company is a buy, but just because I say it's a buy does not mean, you should go buy the stock. I could be completely wrong. I'm not a financial advisor. Everything I say should not be taken as financial advice. But my kind of current plan for this company right now is to do some more digging. I found this company earlier, and I haven't done that much digging. Looking through a few articles and a few presentations should not be enough to indicate whether or not you want to spend your hard-earned money on a company. So thanks for watching this video. If you did enjoy it, make sure to subscribe to the channel and turn on post notifications so you do not miss out on any of my future content. Check out my Discord server, links in the description down below. Also check out the links to M1 Finance, Robinhood, and Webull. Get some free money, some free stocks, get it while you can, and I will see you in the next video.